Hello everyone and welcome to my channel. In today's video I will be combining different technical analysis that we used that we learned in recent videos so we can make a decent strategy which actually I'm currently using. So I'm trying to be profitable with this strategy. I'm trying always to update it and upgrade it. Okay. So first, I will be uh, typing the strategy. First, we need to identify the 1 hour bias, which means bullish or bearish. How to identify the bias? We identify it by using BOS and CHOCH on 1 hour time frame. Okay, so CHOCH and BOS. Good. After we identify the 1 hour time frame, we need to wait for retracement. Okay, so if bullish, we need to wait for little bit of bearish, and if bearish, we wait for bullish. Then we identify the highs and lows of the 5 minutes candle that opposes the color of the one of the trend. Okay, so if we are in a bearish bias on the 1 hour, we wait for retracement, then we wait for price to start repushing lower. We wait for a candle that opposes the color of, for example, if bearish, we wait for a green candle. Then we mark the highs and the lows of this candle. Okay, and we wait for break of structure and we enter. Then we wait for BOS and we enter, and our stop loss is the high of the candle, and our TP are areas of confluence, such as support areas OB will be areas يعني like supply and demand. Okay, here support and resistance areas. Okay, so this is our strategy. So we are in 1 hour time frame. We will take what was happening here. Okay, so if you can see also 4 hour time frame is bearish, 1 hour time frame now is bearish because we had this green candle that broke structure. We had change of character here and break of structure here. Okay, so we went to the downside. Since we know that we are in a 1 hour bearish bias, so we need to wait for retracement, and this is a type of retracement. Okay, so this is a type of retracement, and we go to the 5 minutes. So as you can see, we had a retracement, 3 candles downside, and we have a bullish candle. So in the 5 minutes time frame, I mark out the 5-minute bullish candle that is happening in the bearish market. I go to the 1 minute and I wait for break of structure to the downside. As you can see, we had a break of structure to the downside, so we entered here. We have our stop loss above the high of 5. Okay, this is the high of 5. We have our stop loss above or even to the high of 5. And area of confluence, if you go to the 5, 15, any time frame, you can see that when we were in a bearish bias, so price hit this area and got rejected. So we have an order block here. As you can see, this is an order block, and I am having Fibonacci at 50%. I take half of the order block as my take profit. Also, you can see that we have a resistance area here. This 15 minutes resistance area. If you go to the 5 minutes, you can see that price is trying to push down here but getting rejected. So we can have our TP at these areas. Okay, so TP1, TP2. Okay, you can also have TP3 and TP4. Okay, so if you can see, but you need to wait. Okay, because there is a resistance here, so you might wait and you might getting stopped. So the area of confluence here is my first TP. As you can see, we have demand zone here. This order block is a demand zone too. So different technical analysis that are happening with each other. We have a support here, we have order block, we have a demand zone. Okay, so as you can see, we hit TP1 and TP2, and we are waiting to TP3, and also you can see that price retraced to the area that we entered. So if you missed this area to enter, okay, we can also wait for retracement. Okay, but there was no bullish candle in this bearish area, so we don't enter. As you can see, price retraced to this area, start going down, and we have some bullish candles here. So what we can do also, we can have our high marked out and our low marked out. Okay, now we go for 1 minute time frame and we wait for confirmation of break of structure, which is this area here. Okay, so what does it mean? It means that we can enter after this candle closes. We have our stop loss here, and also we have different areas of confluence on the 5 minutes. So as you can see, we have an order block here, okay, and we have this low here, and we have our main area of confluence. So we could have taken this entry, and we had our stop loss here, our take profit one. So I use Fibonacci to have my 50%. So our take profit one here, take profit two at this low, and TP3 at this area. So now I'm telling you to trade with the trend. And why is that? Because as you can see, we have this bearish candle, okay, that formed. So you can enter here as the strategy is saying, and you have your stop loss here, and you need some areas to hit. Okay, so if you waited here to enter, this area didn't hit. Why? Because we are in a bearish market. So higher areas in a bearish market usually don't get hit. Okay, the probability to hit the area is very low. So you can see that we need to have like TP1 here, okay, TP2 here, TP3 here, but the probability of this price to go this high is very small because we are in a bearish market. Okay, so you can see that we are in a bearish market, so the probability to hit these areas is smaller than the probability to get from this area to this area, okay, because we are in a bearish market. So today's strategy is based on recent technical analysis that I explained in recent videos, such as order blocks, supply and demand zones, okay, we have support and resistance, break of structure, change of character, and trend following. So you can see this is 15 minutes or even 5 minutes order block. Is if you go to 5 minutes, this is an order block, a demand zone that made the price to push up. Okay, so if you wanna take it on a higher time frame, on the 4 hours time frame, you can see that 4 hours in 4 hours time frame, Okay, so you need to start identifying the chart without going higher time frames. So we have a bearish retracement. We could go to 5 minutes here, enter here, and hit the place that retraced from. Okay, so also it can be used at higher time frames, and in my opinion it's very simple, because you need just to mark the highs and lows of an opposite candle. So you know on 4 hours is bearish, so you go to 15 minutes, you have a retracement here. Okay, so if you can see here, price is going down, so we need a, a bullish candle to get broken, but all bullish candles did not break. So we have here, okay, this area going down, we have this bullish candle gets taken out, so we could have entered here. Okay, our stop loss is here, and our TP is the area of confluence right down here. Okay, so as you can see, you can use this strategy on different time frames, but you need to follow the rules. Okay, and this is for learning purposes, so this this strategy might not suit you, or you feel like it's a difficult strategy, but in my opinion it's very straightforward. You need just to know the basics and simple technical analysis, so you can use it and trade with it and make profit. So I don't want to make this video too long. This is money. Money. So if you like this video and if you benefit from it, please don't forget to like and subscribe, and in the next videos I'll be updating you on my strategy that I'm currently learning, and I will record also live trades, and I will be posting them on my YouTube video, so you can see how it's happening live, and you can also see that if the strategy is profitable or not. I will be uploading every trade that I will be taking, lost or won. I'll be uploading it, so you can also learn from my mistakes, and get you the best possible outcome that will help you become a profitable trader. So thank you for watching, and if you see this video and you think that is beneficial, please don't forget to like and subscribe, and see you in the next videos.